Hi, good afternoon, everyone. Welcome to Funding a Better Future. This is a new series of bite-sized episodes featuring the expert insights of ClimateTech investors. My name's Cherry, and I'm the founder of Above and Beyond Recruitment. We partner with ClimateTech startups, and we help them to scale and grow, either by recruiting for them and helping them to build out teams, or by offering talent advisory and consultancy services. This series is aimed at founders and leaders of climate tech businesses, and particularly anyone who's looking to raise investment this year. Throughout the course of this series, we aim to give you a realistic picture of the current investment market, as well as some tips to give you the best chances of fundraising success, and hopefully a network of individuals that you can approach when the time is right for you. Today, I'm joined by Alex Hook, Senior Investment Director at Nesta. Nesta is the UK's innovation agency for social good. They're a UK charity that are focused on three key pillars to their mission. The first being to create a fairer start for everybody and reduce socioeconomic disadvantages. The second being to help people live healthier lives and reducing health inequalities. And the third, and most pertinent to today's discussion, creating a more sustainable future by reducing carbon emissions, promoting innovation, and helping people to cross-train into climate careers. Nesta's Impact Investments is an investment fund which backs businesses that are closely aligned with these three missions. They aim to invest in high-impact innovations that are run by outstanding entrepreneurs, offer them the capital and the support that they need to solve these huge problems. So, Alex, thank you so much for joining me today.
Thank you, Cherry. Delighted to be with you today.
Excellent. Are you happy to kick off, Alex, by giving us a bit of an intro, really, or a bit more meat on the bones about Nesta Impact Investments, and kind of talk us through how it may differ slightly, if at all, from the work of a more traditional VC?
Yes, happily. And thank you for the opportunity to talk to your audience as well. You know, I've been at Nesta for about 14 years, making and managing early stage investments. And Nesta, throughout its existence for about 25 coming up to 25 years, has always used some of the capital that it's lucky enough to have to make early stage investments into innovations that are furthering the objectives of the organisation at a given time. And that is now, as you rightly said, has now coalesced into three long-term missions that we're trying to have a focus on. And I have particular responsibility for the household decarbonisation mission and also the skills gap piece that you referred to as well. How we differ? Well, it is charitable money ultimately that we're deploying. But I think it's fair to say that we go about it in a way that most VCs will look at opportunities. You know, we are always looking at what is the market opportunity, what is the product market fit with or the service fit with the company we're backing. Have we got a great team that have got self-awareness and aren't claiming to be all things? I think a degree of humility and ambition often, can be strange bedfellows, but quite important bedfellows, I think, in founding teams. And we go about making an appraisal. Where it gets different for us is that we are always looking at the other bottom line of the investment. So beyond the financial, what is the contribution that this company, its product or service will make to one of the three mission areas? And obviously in the decarbonisation mission, it really boils down to carbon. We tend to, we want to, I suppose we're not a corporate VC, but we try to act a little bit like one in that we want to bring more than just the cash. So we want to bring some strategic value into the companies we're backing, and ultimately be able to leverage strategic value back into the mission work that we're doing here at Nesta as well. Because of the 300 odd people that work at Nesta, and I work in a team of 10 in that 300, most of my colleagues are focused specifically on one of those missions. And so we have quite multifaceted teams going into the value chains around each of those missions, forming relationships and partnerships with key stakeholders. So where we can, we want to leverage that to the benefit of portfolio companies and likewise, leverage the insights and data and expertise of portfolio companies into the mission team, all with the aim of trying to make a dent on these three big long-term issues that the UK faces.
Brilliant. Excellent. Thank you so much for that. And seeing the landscape as you do, what are your opinions of funding for climate tech this year? Because it's certainly been an interesting start to this year, right? With, lots of nervousness, I think, on the part of founders about how easy it's going to be to raise investment, what their valuation looks like, as opposed to last year. And then with the news of SVB over the weekend, I think it's been a rocky landscape. So what would your opinion be of the landscape this year?
I mean, if we're honest with ourselves, the last 3 years, at the beginning of the year, there seems to have been some major issues going on, and maybe that's the new normal, that we have to deal with greater volatility. Maybe that is the case, but I think, SVB certainly gave a few people a sleepless weekend, myself included, with a couple of portfolio companies banking with them. But no, look, I think that the general climate, last year was a bit of an outlier. 2021 was a bit of an outlier in terms of volumes. 2022 numbers, when and there are now sort of quarterly reports and annual reports coming out, you can see that the trend in climate tech investing is strong, is still strong. And we're certainly aware of, across the funding landscape, from early stage EIS, SEIS funds right through to larger, bigger private equity funds, there are more and more people looking, more and more funds raised with a mandate to invest in and around the climate tech agenda. So I think that there's certainly an availability of capital. There could be a degree of caution about making new commitments, particularly in that sort of the mid-bracket, the Series A end, where you've seen a lot of funds are just holding back the rate of deployment, just slowing a fraction, because they're reserving a bit more capital for existing portfolio. I think that's probably less true at the seed, pre-seed, seed stage. I was just reading yesterday, Green Angel Syndicate, announcing that they've raised more money than they've ever raised annually before for their EIS, SEIS funds. So, I think there are there's still an availability of capital. So I'm pretty buoyant, actually. I think, the good ideas that have some differentiation, will find an investor. There are more investors out there with some sort of climate mandate. So I think it's a good time.
Good. Oh, that's a very, very reassuring picture then, hopefully, for people that are watching. So despite some volatility, still a positive market generally, especially for those earlier stage startups. Fantastic.
Yes.
And what are you most excited about this year? Because I appreciate, climate tech is a very broad church, right? And underneath that, there are lots of different subsectors. Where would you say you, and particularly Nesta, are interested in investing this year?
Yeah, it's a question that we talk about daily, weekly here. Kind of what are we excited about, and what opportunities should we be pursuing next? We've done a number of hardware investments in this decarbonisation mission to date. We've announced 2, and there's one that will be announced very soon. So that'll be 3, which is good. And you need hardware to decarbonise, So, absolutely, if we want to take a chunk out of household carbon, we need to back some hardware businesses that do it. But looking forward, we don't just want to be a hardware fund, and so we are increasingly interested and excited by a number of more software plays, I suppose, more software-centric plays, particularly around, I suppose, 2 aspects that we're really interested in at the moment. One is data, the use of data to help us better analyse the current state of play and what a future roadmap towards a decarbonised household might look like. And data is a bit disaggregated in this sector at the moment. It is slightly siloed. And so actually finding opportunities where you're sort of connecting different data sets to inform business decisions for the customers, the end customers, we feel is relevant and interesting, and something that we're looking at closely. Also looking at, there is a service wrapper to a lot of businesses. If you're going to ultimately move a household on a decarbonisation journey, there needs to be, expecting a household to unpick all the advice and conflicting advice that you might get about what you should do first and next, and what's the payback. And, we do believe that there is a service wrapper to all of this that allows customers to have, some independent advice that introduces them to the right people at the right stage in their own journeys to facilitate and hopefully make easier the decision to make upgrades and renovations to their properties, whether that's owner occupiers, whether or not that's in the social housing sector, or ultimately in the private rental sector. But they are different sectors with different drivers. So we are conscious that it's not one size fits all. There's no silver bullet.
Yeah, that's interesting. Yes, because there isn't one front runner in that yet, is there? That kind of service that as a homeowner you could go to and would literally take you through beginning to end that decarbonisation journey, how to retrofit your home. And it's quite a murky, opaque kind of world, I think, to the general public, right?
Yeah, and there are some factors at play here. You're absolutely right. There's no dominant service. We're aware of a number of really interesting businesses, in that sort of startup phase, and coming to market with, and should start generating some good traction, hopefully over the next year or so. But there is also, there's, in back to the skills piece around this. We do have a bottleneck. If we really do want to decarbonise homes, we have got a fundamental bottleneck, and that's not the number of solar panels that can be produced or ultimately the number of heat pumps, but it's actually around the installation. It's actually how do we have enough people to actually drive the volume of retrofit activity, and how do we make sure that we do over the next 10 years? So, there is the market ready for everyone to decarbonise tomorrow? No. But over the next 10 years, we think there will be some really interesting plays, some of which are sort of full service and, will hold your hand right through the installation journey. You'll just have one counterpoint as a customer, the company delivering that service, who will, facilitate the install and all the things, and you might even have an ongoing sort of service and maintenance relationship. Or that gets slightly disaggregated, and there are elements of it, and you take the journey so far. But we're also, something that gives me hope is that we're starting to see large corporates now, big financial institutions and energy companies really starting to think about how do they help their employees, but also more importantly, in terms of volume, their customers make some decisions and facilitate this transition, because it is a transition. How we use energy in our homes and how the energy is supplied is already changing and is going to continue to change over the next 15 years.
Yeah, I think there's an announcement yesterday or today, I think, wasn't there, that the UK government have got a £1.8 billion fund allocated to this problem, exactly, the decarbonisation of the housing stock.
And the argument there is, I think they've been really good in the social housing sector at really sort of trying to create some clear, incentives and some grant funding. A lot of the stuff in the own occupier space at the moment is still relatively small scale. It's been, actually finding the people who are willing to go on the journey has proved harder. So the old green homes piece, and then more recently the boiler upgrade schemes, they have struggled to get to full capacity in terms of the funding available and the number of projects done. So there is a communications piece here as well, that needs to, I think, government and the local authorities need to help, the startups in terms of evolving the market and starting to trigger, I suppose, a little bit more demand. But you do feel that, things like the boiler upgrade scheme, that sort of £5,000 grant, are important. They're important because they remove some of that disparity, the cost disparity up front, which hopefully reduces friction, increases demand. But the evidence isn't there yet.
No, absolutely. And for any startups that are kind of in the spaces that you just previously mentioned there and are potentially interested in approaching, an organisation such as yours for some funding this year, what advice would you give to founders? And, how can they make themselves as attractive as possible? What can they be focusing on perhaps over the next 6 months that could make them more attractive, I suppose, to invest in?
Yeah. I mean, it's a great question. It's a great question. I mean, you might have even said the word in the question, actually, the word focus. We meet a lot of founders and fantastic founders. I mean, it's the best part of the job. Is meeting really motivated and passionate people who are doing things that we're excited about inherently. I think there is a risk of over-promising. So, I think my always preference, and I've learnt this domestically as well, back at home, is, where you can under-promise and over-deliver, that's always the better side of the equation. So being really clear about, kind of where you are on your journey and what the critical next steps are, and trying to do one or two things really well, rather than trying to do five things sort of okay. So, and this is particularly, I suppose, ultimately with some of the actual customer-facing products or service you've got. Do one or two things, maybe just one thing brilliantly, delight your customer. And that is the best way to really get some traction and to actually get some positive endorsement from early customers is they're just delighted that you've somehow over-delivered on what you've promised. So I think that is important for us. I mean, where we sit, we typically are sort of late seed, Series A investors. So there's typically some sort of product market fit. There's typically a customer who is paying for something. And it might not be the absolute ultimate thing, but there is some customer engagement where we can actually understand how this product or service that the startup is offering is really addressing a customer pain point, be that a business or be that ultimately direct to consumer. So laser focus on a smaller number of things, particularly when you're speaking to other to VCs. Don't promise the moon on a stick. We do see an awful lot of financial forecasts that get to space trajectory, rocket trajectory in years sort of 4, 5, 6. And I have to confess that we do spend a lot of time pruning those expectations about the rate and pace of growth. I think what we need to believe, and that's fine. That does happen. We do recognise that companies, when they're raising, have got to be able to present an upside. What's important is just being realistic about when that upside comes and what are the critical steps to getting that sort of tipping point of inflection with customer demand, and just really laser focus on the next 3 to 6 months. Kind of what do you need to do to push your customers on that journey of actually, sending you a purchase order for the first iteration of the product or service that you're offering. So do less, but do it better.
And I love that, because I think people do perhaps get caught up in the need to present, like you said, this overly optimistic picture of future success, and the upside, but perhaps overselling on the upside. So I think that's perhaps very useful advice to people to feel that you can give a more realistic, stripped back picture. And then I suppose once you then get the investment, there isn't that awful pressure to have to deliver this ridiculous thing you promised, right?
That's right. I think it's so important. When we, the investment process for us is typically, a 3 to 6 months process, depending on when we first met the company, how formed the round is, etc. But it's somewhere in that range. But that, and it's, it's intense. We have to lift the drains, open the cupboards, understand everything about this business and the team that we're backing. And that's a key attribute of our process as well. But ultimately, all of that, we've made the investment, we're delighted we've signed the shareholders agreement, the subscription agreement, but that is just the start line. That is all, everything we've been doing up to that point is just, courting. And now we're actually, we're making a firm commitment, which we know lasts for 5 to 10, might be longer, years. So setting, getting off on the right footing with the right expectation set is critical, as you just alluded to, Cherry. If you don't, there is a recipe for disappointment on both sides. And we've got to be conscious of not, promising the moon on a stick to the founders that we back. We want to do more than write a check, but it's not always in our gift. So we just need to have a very open, frank, and constructive dialogue with the teams that we're backing. So it's a journey. It's a long journey, but an exciting one. I think we get super excited, as I said, to meet, founders with clear passion, motivation, hopefully a bit of experience, going on this journey, and where, founders don't necessarily have all the experience. Back to a point I was making earlier, the humility to say, and, the humbleness to say, well, actually, this is an area that I need to strengthen. Here, we're not, presenting themselves and the business as perfect is always, can be a surprise. So sort of a candidness about, yes, I'm good at this, but I need to add this, or we need to add this to our team and our capabilities. We find, it is always goes down well with us, because it's a bit more open and honest. No one is perfect and can do everything, despite what I tell my wife. So.
Absolutely brilliant. Thank you so much for that. And I definitely, I know in my own business, I kind of echo that point you made about being on that journey with a founder, and that, but definitely the best part of my job is being able to speak to people every day that are creating, innovating, building exciting, brilliant things, and getting caught up in the, the dream of what they could achieve and helping them to do that. So yeah, so seems like there's some similarities between what you and I do there. And you mentioned earlier on, right at the very beginning of our conversation, about a couple of investments that you've made and about to announce the third one. Is there anything you can share with us about what you're particularly excited about within Nesta's world this year, what you guys have got coming up, and what you can share?
Yes, I mean, particularly in within our, as we call it, a sustainable future mission focus, which is the household decarbonisation and sort of productivity and skills piece. There's a lot of things that we've been working on. I mean, last year we spent a lot of time looking at the sort of, the drivers and blockers to the adoption of heat pumps. We've been delighted that, people like Octopus now and British Gas are, actively, trying to push heat pumps, which is great. But heat pumps, like other things, aren't a silver bullet and not applicable in all situations. So certainly the mission team is looking quite a bit at, flexibility, demand flexibility. What can you do? How can we support households to turn up, turn down demand, to make sure that we can balance in put in as much green electrons, renewable electrons into the grid, and optimize and use those green electrons rather than wasting them or asking Scottish wind turbines to turn off, which feels like a tremendous waste of money. So looking at how can we incentivize individual householders to participate in that is something that we're interested in as a team, but Nesta and the mission team are very interested in. We've got more. There is a myriad of things that we're working on, and there will be more on the productivity area as well, looking at the green skills gap. There is as I said earlier, a need for us to think differently about how we train people and how we support people to maybe make transitions in their careers towards things that are maybe more about future skills than last century skills. So no, there's quite a lot. I'd encourage anyone to sign up to the Nesta newsletter via the nesta.org.uk website.
Great plug. Excellent. And Alex, if people listening to this are founders of businesses in the areas that Nesta would be interested in investing in, what's the best way for them to get in touch?
Yeah, so you'd always be welcome to email me directly and alex.hook@nesta.org.uk, or you can go via. We do have a web application form, which is which we're screening on a daily, weekly basis. So you will always get a response there as well. But please knock on our door. We'd always be welcome a conversation, whether or not it's right or not for us. We would always try and give some constructive feedback, and where we can, signpost to other investors who might be more suitable.
Fantastic. Thank you so much, Alex, for joining me today. And if you've missed any of our previous episodes, we've had some fantastic conversations with people from Planet A Ventures, AO PropTech. Those two were just last week. And we've got more episodes coming every Wednesday and Friday for about the next 4 weeks or so. So watch this space. Thanks very much again to Alex from Nesta, and thank you to everybody that's come and joined us today. Have a great rest of your week.